A lack of commitment from the FOMC in its commentary last week, along with lower than expected quarter-on-quarter GDP numbers, may have served to stifle concerns of a near-term rate hike in the USA. This may have been the reasoning behind the USA markets' rally towards the end of last week, during what has largely been seen as a fairly flat earnings season as a risk-on mentality re-entered the market. Chinese PMI data missed estimates this morning, coming in at 47.8 as opposed to the forecast of 48.3. This saw most of Asia, barring Jakarta, get sold off fairly heavily as questions about monetary and fiscal policy in China are once again being called into question. The Greek stock exchange opened for the first time today after a 5-week shutdown, its longest since the 1970s, and the benchmark index tumbled 23%, with Piraeus Bank and National Bank of Greece dropping over 30%. The rest of the week shifts the focus to the USA with ISM manufacturing PMI data today, US trade balance data on Wednesday, and the non-farm employment data on Friday. Locally, last week saw the industrial shares come under pressure with the likes of MTN experiencing a sharp sell-off after the release of its trading statement, which alluded to earnings per share being 10 to 15% lower than expected for the last 6 months. The weakening and volatile Chinese markets had widespread ramifications on company shares like Naspers, with its tenuous links to Hang Seng-listed Tencent holdings. Continuing on with local corporate data, and the week sees Peregrine and Brait go ex-div today. We're expecting a half-year earnings release from MTN on Wednesday, a half-year earnings release from Old Mutual, and a Q2 trading statement from SAB Miller on Thursday, and finally earnings releases from Sappi and Liberty on Friday. Top gainers on the top 40 are currently Tiger Brands, Old Mutual, Steinhoff, Mondi, and Growth Point Properties, with the biggest losers currently being Anglo American plc, Mediclinic, Brait, Aspen, and Remgro.